Hi all, today we are going to discuss about revised schedule 6. Revised schedule 6 is the part of Companies Act 1956. Mm, Later on, it is amended by the year 2013. Its main objective is to ensure uniformity, and it should be easy to compare with the previous year, and it should be transparency in the year of financial reporting. Then financial statements are more aligned with IFRS. Then it prescribes vertical format. Horizontal format is not allowed anymore. Next is applicability. Nowadays, it is applicable to all the companies who are registered under the Companies Amendment Act 2013. Then these type of financial statement is mandatory from 1st April 2011 onwards. Then for few companies is exempted from these sort of conditions. They are insurance companies, then banking companies, electricity companies, and the companies preparing financials under various other specific acts, because they have their own set of rules and regulations, and they follow and prepare according to that. Next one is structure of revised schedule 6. Two parts. Part 1, form of balance sheet. One is equity and liabilities and assets. Next one is statement of profit and loss account. In this expense revenue, then profit and loss account item should be entered. Next one is key features. Regarding key features, usually these financial statements are prepared for 12 months for a one financial year. Um, then separate disclosure of share capital, then reserves and surplus, then if there is any borrowings or security details, and there is any contingent liabilities, then expenses like that. These type of items will be shown in the nature-wise classification. Next one is balance sheet format. That is a format one. This is full of equity and liabilities. Shareholders fund. Shareholders funds mean funds received from the shareholders. That should be shown in the equities and liabilities side. Then share capital. Then reserves and surplus. Reserves is taking for the future contingencies. Then non-current liabilities. Then if there is any long-term borrowings, then current liabilities. Then trade payables. Trade payables is nothing but bills payable. Then if there is any short-term borrowings, it should be shown in the equity and liabilities column. Next one is asset. In asset side, first we have to write non-current assets, then fixed assets, intangible assets like goodwill, then current assets, then inventories, then bills receivable, cash should be shown. Next, part two, that is a statement of profit and loss account. In this, revenue from operations, other income, total expenses incurred, cost of materials, employee benefits, depreciation, financial cost, then profit arised before tax should be shown, then tax expenses, then profit after tax, EPS, that is earning per share, should be shown. Advantages. Regarding the advantages, um, because of following this revised schedule 6, standardized presentation will arise on all the companies whose they are preparing this revised schedule and following the rules of revised schedule. So it is easier to compare with previous years. Then it improves clarity for recording transactions, and it gives a view for investors and stakeholders. Then it meets global reporting expectations. So it is easy to compare and easy to understand the statements, and then it is globally accepted one. Here, revised schedule brought consistency, transparency, and it is highly aligned with IFRS. So it makes financial statements more meaningful. Thank you.